use technical analysis to help you predict market direction? Do you look at charts or price action?
Yeah, I mean, price is all important. And the chart is a visual representation of what's happened to the price. And so you can look back at patterns, and this is what chartists do, and some people say it's rubbish, that you shouldn't, it's a bit like reading the runes or something, that how can something that's happened in the past be projected into something that's going to happen in the forward. But quite often markets do move in patterns. You've only got to look at a chart sometimes to see that a range has established itself, that a market trades up to a certain level, pulls back down to another level, goes back up again. Not in straight lines, but it'll do it over time. And that can, it's not always, something will range until it stops ranging. But, it's a potential. It's sort of showing you where support might be, where people are prepared to come in and buy something. And then it shows you where upper line of resistance might be, where they think, well, actually, no, I'm going to sell it there. There might be all kinds of reasons for that, which you don't really need to bother about. You just know that there's support there, resistance there. In exactly the same way, you can look at a chart and you can see a market trending, whether it be up or down. And sometimes it is very, very clear. And that one of the easiest, one of the nicest, relatively easy ways of making money is to get on a trend, see a trend establishing itself and ride that, because trends can last for quite a while, and that's something that you can make good money from. But you have to study a chart to be able to do that. And as far as technical indicators are concerned, I personally limit myself to just a few. I mean, there are things like moving averages and Bollinger Bands, which I think are very important and useful. That obviously simple lines of support and resistance, where prices are clustering around certain levels. But also things like MACD and RSI. I think, for me, something quite simple. I don't want to overcomplicate it. So those are the kind of things I'd look at.
And just going back one step, how did you get into technical analysis?
Well, just because I could see that it made sense. And I think you have to have something to ground your trading on. There's a feeling that you get when you sort of first come into the markets. Well, and if you're naive, like I was, you think, well, they can only do two things really. Something can go up or it can go down. Yes, it can, and sometimes it can stay the same. But it will do these things in its own way. It won't do it because you want it to do. Something will go up a bit and then come down a lot, and vice versa. So you can't just jump into a market and think, well, it's a coin toss, and I'm bound to make money eventually because it's bound to go my way eventually. It doesn't work like that. So you need to ground yourself in the charts and to sort of try and establish points of support, resistance, a trend, a range, anything like that, to give yourself at least a reason, on top of any fundamental analysis you might have done, to give you some points where you could enter a market, exit a market, and also know that if a price hasn't done what you'd hoped it will do, that the chart might tell you where to put a stop and where to cut your position as well.
Why do you believe it works? Can answers really be found in charts of the past when the present is so utterly unique?
Well, I think it can. I do think, if we think about the economy, the economy is basically cyclical. I mean, we have times of expansion, we have times of contraction. There's no end to boom and bust, and it was a silly thing for Gordon Brown to say in the first instance, but you can't end boom and bust. You might be able to smooth it out a bit, but you're going to have times when your growth is booming, and you're going to have times when you're in recession. And a recession always comes along at some time. Now within that, so that's a sort of a broad market. That's a broad cycle. But within that, markets operate within those. That not exactly a parameter, but it happens to markets as well. And certain things are going to do well in times of expansion, and certain things might even hold up when we're in recessionary times as well. It's likewise inflation and deflation. So what I'm saying is, yes, that's happened in the past, but well, it's not ridiculous, but I mean, history doesn't repeat, but it does rhyme, and you do see things repeating, and you can pick that out from charts, and so I think they're very helpful from that point of view.